Good afternoon and welcome to today's Cornwall Insight podcast. Today we're going to be talking about liquefied natural gas. To introduce ourselves for today, my name's Sam Peake. I'm a senior analyst here in our assets and infrastructure team at Cornwall Insight. We're also joined by Joe.
Hi, I'm Joe Kamish. I'm a lean analyst here at Cornwall Insight.
Today we're really going to be looking to unpack the liquefied natural gas market. I think I think the catalyst for a lot of that discussion has really come about from the shortfall of Russian natural gas reaching Europe this year, and has really kind of put liquefied natural gas to the forefront as a supply of gas to Europe.
A lot of this starts really from the Russian invasion of Ukraine, which has really changed the sort of landscape for the gas supply sort of landscape here in Europe, which has now become, which has obviously been for an extended period of time been heavily dominated and met by Russian gas. Many countries having a quite significant foothold from Russia. But now we seem to be flipping towards a lot more of that demand being met by LNG.
Yeah, and it's certainly something we saw in the early parts of 2022, as Joe rightly pointed out about the Russian invasion of Ukraine. It was almost a snowball effect, really, of seeing those volumes of Russian gas or natural gas slowly start to be removed from the market, and indeed removed from European gas supply as well. We then saw that kind of period of outages on different pipeline. We saw Nord Stream 1 go through a phase of maintenance works where actually ended up resulting in the pipeline being shut off in its entirety. We now know Nord Stream 2 never actually made it off the ground. So we're really now in a situation, at least in my view, where Europe has to look at other means of procuring natural gas or alternative gas supply to Russian natural gas. And I think that's kind of fallen nicely in the lap of LNG, really.
Yeah, I think we saw that really stem from a lot of the policy announcements that got made from the EU, especially straight after the invasion of Ukraine. Obviously, a lot of the sort of policy announcements were sort of heavily skewed towards the rollout of further renewables capacity.
Yeah.
But obviously, it takes a much more sort of longer period for us to sort of get towards those sort of longer arching goals that we want to sort of get to. So, especially in the sort of short to medium term, the role for gas is going to be there, and with the need now to sort of move away from those supplies of Russian gas, of which has seems to be the case now, and has to be met by something else, and LNG has really sort of become that major source, especially like you said throughout 2022.
Yeah, and I'm actually reading some reports and material out in the market at the moment. I know Shell have just released their LNG report for 2023. They've stated that LNG imports last year, so for 2022, were up by about 60%. So I think that's probably testament to the fact that how strongly Europe are looking to procure LNG. We're also quite fortunate at the moment, at least in my view, that the kind of Chinese demand is much lower than perhaps previous years. So historically, a lot of the work that Joe and I do kind of looks at those comparing trends in different geographies. And I think historically, we as the UK and GB have had to compete, and indeed Europe have had to compete with those kind of Far East regions who have historically been prepared to pay a slightly higher premium for those volumes. Naturally, though, with that kind of demand falling away because of COVID restrictions and industry downturn in the area, the UK and Europe have been able to procure those volumes at a heightened level, and in turn, been able to kind of use LNG as what we always call like a supply side balancer. So keeping our gas supply levels up at a level that's comparable with demand as we move through the kind of winter period.
That's one of the major trends as to sort of why Europe was particularly quite fortunate last year with what was going on. I think there was obviously some real worst case scenarios in terms of where supply issues could have really gone to if we had really a cold winter, if Chinese demand was where it would typically usually be. But definitely the market was helped by the fact that the lockdowns throughout China, the sort of plunge in terms of the demand from the Asian region more generally, really did sort of make Europe the beneficiary of a lot of that influx of LNG, especially from America, for example, where I think other reports have sort of shown US exports to China Q22 was around about sort of 50, just over sort of 50% of their exports now throughout large periods of sort of months to date. That's been much down towards sort of 30 to 20%. So Europe's heavily sort of benefited of the fact that the demand over in Asia has been so low.
Yeah, absolutely, and that kind of brings us on nicely to something that we look at quite closely. I think is that kind of diversification of where we get our energy from. A lot of the work we do is kind of mapping out some of those or those historic trends that we often talk about. I think if you were to look at those, the broad spread of it would be Qatar has historically been have been the largest contributor to our kind of LNG flows throughout time, probably going all the way back to probably the early 2000s, or at least kind of 2005-6 onwards. We're now seeing though in the last sort of 3 or 4 years, and even more so in the last kind of 12 months, that spread has changed quite significantly, hasn't it? So, we're now seeing people like the US come to the fore in terms of their level of exports. We've also actually started to see players in South America come to the fore as well. So places like Peru, for example, that are probably now looking at Europe as a more viable option to send their flows to Europe.
Especially where prices are at the moment, yeah.
Exactly. And it's been, kind of testament to that of the demand for LNG, really. And there's players in the market or LNG exporters that are looking at the European market and seeing that the demand appetite is so high and how they could potentially play a role in kind of supporting that.
Yeah, I think the sort of the spread of where we've seen supply come from for Europe has been vast, and it's really been helped by just how high prices, especially on the sort of spot market, got, and the influx of just the amount of cargoes that were sort of available throughout periods of time last year. It will be interesting to see how that trend develops, especially now we're seeing both gas prices start to trend lower. Also now it's filtered through to the sort of spots on LNG prices as well. We'll be interested to sort of see how that develops. I'm sure that'll be sort of largely sort of dictated also by what demand levels in Asia are like as well.
Yeah, definitely. I think if we were to look sort of, albeit we have sort of left the meat of the winter season. I think it'd be interesting to see what happens, if Chinese demand was to kind of increase quite substantially in the next few months, kind of at the end of the winter season. I think certainly, as I've said before, we've been pretty fortunate really that the mild weather has kind of helped alleviate a lot of the concerns that, National Grid as a system operator had perhaps over the winter period. And LNG has been kind of a pivotal role in helping to support that. So, I think the kind of upcoming winter period is going to be one that's really, or the remainder of the winter period is going to be something that's going to be interesting to look at, particularly if we start to see kind of Chinese demand come up, as historically, we often talk about the fact that we've been competing with those geographies, and in turn has bumped prices up higher. I know we actually saw back at in the kind of summer of last year, somewhat uniquely, I think that's when prices peaked at their all-time high. I think the liquefied natural gas price or the spot Asian LNG price was in excess of 500 pence a therm. We're not there at the moment, so it's fallen off quite strongly. Yeah. But that it does show a level of volatility in the market that's still there, as well.
I think also one of the other things that may be beneficial for Europe and prices will be the fact that we've had such a mild winter, the fact that we had such a sort of influx of supply come in the lead up to winter, has meant that the storage levels, especially on the continent, are a lot higher than maybe first we expected, but also for just compared to sort of longer term averages. I think the European Commission were sort of forecasting that we're expecting to sort of leave the winter season around about sort of 50% full. So that then puts us in, or Europe as collectively in a better position, for the preceding winter period, where hopefully then it should mean that we have to, to reach the sort of 90% targets that I think have been mandated by the EU. To reach that level should take sort of less of a feat compared to where we were coming into, say, sort of previous winter that we had, where I think we saw storage levels around about 20%, coming out. So, that should hopefully help matters, I think, especially if, like you say, Asian demand does pick up.
Yeah, and I think one of the concerns that's been shared, across the market actually is it's great that LNG is available and that the UK is able to procure it. Signing some longer term deals with the US, for example. There are some perhaps question marks over the level of infrastructure that's currently available to support that level of import. We as the UK are quite fortunate that we have, a handful of deep water ports where we can, just based on our geographical location, we're in Ireland, we're able to kind of import those volumes from different areas of the coast. So up in Milford Haven and the Isle of Grain and Kent and so forth. So we as the UK are quite fortunate that we can actually have those volumes come straight to us. They could be regasified, sent through the national transmission system, and then we can disperse those volumes as and where we see fit. I think, at least my concern would perhaps be if LNG is going to be lent into more in the future, and indeed to supplement that shortfall of Russian gas, there's going to need to be quite a significant amount of additional infrastructure to what we have now in Europe and perhaps at the UK to support that level of increased import. I know there are some talks about perhaps having or Germany kind of signing off on some new regasification terminals, which I think is a good thing. But we have seen actually last year where there were some examples of kind of bottlenecks. If you can remember, where we had, kind of dozens of LNG tankers waiting offshore, basically for a terminal that had the capacity for them to come in. So there are some challenges, I think, at least from an infrastructure point of view, of procuring that volume of LNG.
Yeah, I think that's only natural given the fact that the sort of sea change that we've seen in the last sort of 12 months, the fact that there's been a significant pivot towards LNG, which then obviously, like you say, subsequently means the infrastructure that needs to be and the investment that needs to be put in across Europe. I know we've seen a number of floating LNG terminals in the likes of Greece and other sort of areas in that region as well. There's been 2 in Germany that I think have just gone live as well. But obviously more needs to be done, especially if LNG is going to have such a foothold in the sort of medium to long term anyway, in terms of meeting that demand for gas. Like you said, the level of investment is going to need to be quite significant, and the pivot as well towards that, especially when a lot of these countries are trying to sort of put further investment into sort of renewables as well, brings up certain sort of interesting sort of debates around sort of whether where should money be going. Yeah. But obviously to meet that near term demand, I think that's the way things are going to go, I think.
Yeah, I think you're absolutely right, and also I'd probably say we're not really blessed with too many other options at the moment.
Of course.
When you're trying to fill a hole of kind of 30-40% of Russian natural gas that's just been taken away, there is going to be an element of a notable transition period where the Europe and the UK are having to look at means to supplement that deficit, and I think LNG has been the kind of immediate solution. I think if the shortfall of Russian gas is something that's going to extend beyond in many years to come, I can see LNG being kind of that one of the main sources of gas into Europe, and I think we might start to see the emergence of some more longer term deals like we've had with the US, kind of making some of those stronger links with those large exporters, like the US and perhaps Qatar and those other places as well.
Yeah, I think equally, obviously, there's a sort of geopolitical element that comes into it as well. Yeah. Obviously, I think in the sort of the preceding sort of months after the sort of Russian invasion, we saw the likes of Britain, the EU, and America as well go off to sort of various countries across the world, lots in sort of in the Middle East, especially with regards to sort of securing deals for the likes of oil and gas. So I think we can expect to see sort of further sort of cementing of those agreements, especially in the sort of short to medium term anyway, because like you said, the diversification needed to sort of supplement that significant shortfall from Russia is vast. So I think that's only going to be really the sort of direction of travel is.
Yeah, and I think the UK's probably has managed to probably break away from Russian or energy exports slightly easier than perhaps the EU. I know the EU is still continuing to receive LNG from Russia, albeit at kind of relatively subdued levels to perhaps what we've seen historically, kind of pre-Russian invasion of Ukraine. But I think those volumes are still coming into the EU, whereas I think the UK's direct reliance on Russian, at least natural gas and LNG exports was already quite low. So that breakage was already quite. It was easier for us to manage perhaps than the EU that had quite a deep and embedded, multi-decade relationship with Russian natural gas exports. I think.
Yeah, I think you saw that with the likes of Nord Stream 2.
Yeah.
It was something, a deal and an infrastructure project that was much maligned by certain sections of either other EU states or just other sort of actors and stakeholders, but was pressed ahead because of the sort of reliance on that sort of cheap supply for gas. But obviously the landscape's changed now, and I think it's like you said, it's going to be considerably harder for those European countries to sort of completely break away. But I think we've seen over the last 12 months that I think the tactic of maybe using natural resources as a as a lever or influence from maybe Russia maybe hasn't worked as much as maybe they expected. I think the likes of Europe and the EU has actually managed to sort of pivot away from that reliance, and the impacts of it maybe a lot easier than quite a lot of actors in the space would have probably expected, really.
Yeah, and I think, as you rightly point out, Joe, I think that kind of scepticism around getting Nord Stream 2 off the floor anyway was already there. And I think actually the catalyst, with kind of Russia deciding to invade Ukraine, I think that was probably the evidence that everyone that was, not for Nord Stream 2 kind of going ahead was presented. So, I think it's worthwhile kind of mentioning that there was probably already some skepticism in the market of that increasing dependency on Russian energy exports, and I think it's probably shown, in my view at least, a level of adaptability to change in quite a short period of time. The EU and its member states, I think, have done quite a good job of actually pivoting in quite a short period of time, and I think it shows a kind of unity that I think a lot of those member states and indeed the UK as well have kind of been fairly flexible in terms of looking to kind of transition away from Russian natural gas in a short period of time, and indeed then heading into a winter period for the first time ever really without Russian natural gas. Albeit we've probably been quite fortunate, with the mild winter really, that we haven't seen that kind of drastic withdrawal from EU storage as perhaps could have been forecast in some certain prolonged cold weather scenarios. But I think it has shown a level of adaptability, at least in my view.
Yeah, I think that's something that probably doesn't really get maybe enough credit in terms of the sort of politics in the background that was required for the sort of wider continent in Europe to actually sort of collectively sort of pivot away. I know obviously there was sort of some exceptions with some of the countries further sort of east that had a particularly heavy reliance on Russian gas, and those exemptions were made. But I think maybe there were expectations that there may be sort of splintering within sort of member states, especially those more reliant on gas from Russia, and against those with less or little to none. So, like you said, I think the fact that we've made it through the first year and not in a splintered state, and actually probably more unified towards a goal of probably greater investment in the likes of LNG, broaden it up to wider markets, but also the sort of longer term sort of investment and policy around further investment in renewables, so that probably it even cuts off that further reliance on sort of needing supplies from sort of further afield to be able to actually properly have a greater security in your own generation. That seems to be really coming back to the fore in terms of sort of the energy trilemma around about security of supply as well. That seems to be really coming back into the fore now.
Yeah, for sure. I think that probably brings us on nicely to perhaps what we think might be the case for going forward into 2023. I mean, certainly my view, I think, would be that we're probably going to see a level of volatility and price continue. I think, as we've mentioned, we've kind of teed up some of those influences, perhaps that could change the course of the UK and Europe's relationship with LNG. Indeed, from a price point of view, if we saw kind of Chinese demand rise again, those competing factors could influence prices going forward. Equally, if Chinese demand was to perhaps plateau and we saw this, it stayed in the kind of present environment as we are now, I could sort of see some scenario where we might see some kind of volatility in price based on those factors. I know at least from the start of this year, kind of out to present day, that LNG prices have been relatively flat. They haven't been too volatile at the moment, but I do think history kind of dictates it doesn't take too much of an event, or it doesn't take too many events to really for the price to kind of rocket up, and then we're all talking again about how everyone's competing for liquefied natural gas again. But I think certainly my view would be that we're probably going to see prices perhaps subdued in the first instance, but maybe when those competing factors start to come, and we might see the volatility in price continue.
Yeah, and I think it'll be interesting to sort of see how that plays out. Like you said, as and when that pickup in Asian demand does occur, how volatile prices get. I think, like we sort of touched upon already, I think the fact that we're sort of leaving winter with a lot more sort of ample storage left in stocks does sort of bode well for the preceding winter.
Yeah.
In terms of maybe having a less of a need or a reliance to sort of start filling up from a quite significantly lower base. So hopefully that should maybe dampen down on some of the volatility that maybe filters through to the more sort of localized gas markets here.
Okay, that brings us to the end of today's podcast. We hope you found it useful. It's certainly something that Joe and I are really interested in and continue to do a lot of work in. If you're perhaps interested to learn more about the work we do, talking and analysing all things LNG, do let us know. Our flagship pricing service, the Energy Market Bulletin, covers this on a weekly basis. So please get in contact with us, and we'd be happy to talk more.